Hey everybody, happy Tuesday. It is OCTA time where we look at on-chain information, a couple of charts, and try to figure out what's going on on-chain information, a couple of charts, and try to figure out what's... I'm a little bit earlier than normal today, but I hope it works for you all. So let's jump in and blast through this real fast. I promise you edutainment and learnings all in one package. So as usual, entertainment advice. Not financial advice. I never said entertainment advice before. And we're going to start off, believe it or not, with good news. I start with the preponderance of where there's most news. And the good is here. So again, on-chain data is pretty much good so far. So first of all, 2/3 of all Bitcoin has not moved in 1 year plus. And this is from John Burnett. And while the crypto world is in absolute chaos, 66% on the nose has not moved in the past 365 days or a lot more. And these coins, likely sit in cold storage with no counterparty risk, won't be transacted until the price multiples is way, way higher. And these Bitcoin holders are relentless. And you can see that with the upward movement in the price. And this number will go above 70%. Mark my words, in the next... I'd say we got to roll out another year plus, but the next year it's going to be 70 to 75% because nobody trusts exchanges anymore. I'll talk more about exchange data too right now. Here, this is from Bitcoin Magazine. You can see that the circulating supply in the market right now is back at 2018 levels of just 12% of all Bitcoin. That's also going to go under 12% real soon because everybody is draining their Bitcoin from the exchanges. And that is a keynote here. You can see the dollar value as well on exchanges, worth about 38.4 billion, which is a lot of money. And the total amount of Bitcoin on the exchange is about 2.3 million, down from the high of 3.155 million Bitcoin. So that is kind of interesting to say the least. Now, the title of this video is Absolute Accumulation. I have not seen this chart look this way for quite some time. Every single cohort right now is accumulating. We're talking the wallets that are 10,000 plus, 1,000 to 10,000, 100 to 1,000 Bitcoin, 10 to 100 Bitcoin, and 1 to 10 Bitcoin. This is something even less than 1 Bitcoin. Everybody right now is accumulating. Anybody who sold this week, this is not a good time to sell. And large volumes of Bitcoin are flowing out of exchanges. We can see that across all wallet cohorts. And obviously the FTX event, a big black swan, triggered a distinct change in investor behavior. On-chain wallets from Shrimp, etc., whales, all experienced a net balance increase throughout the FTX collapse over the last couple of weeks. And for some cohorts, this has been an almost perfect 100-degree turn from the regime of sustained distribution over recent months to accumulation, particularly in the 1 to 10 cohort and earlier in the summer, the 1K to 10K, which has the most Bitcoin. They are all accumulating right now. So again, not a good time to sell if you're considering it, not financial advice. Now, another point here, and this is for Charles Edwards, it's definitely not the time to sell. This is historically the optimal time to allocate to Bitcoin, which is proven by the on-chain data before, and all prior Bitcoin cycles have bottomed by this point in the halving cycle. And we have less than 100 days until all other cycles went vertical. So Charles Edwards is getting very excited. The question is, will history repeat or will it be different this time? Yes, the macro information data is very, very different. Markets very different, but we'll see. I am cautiously optimistic. Let's look at Bitcoin dominance alone, Bitcoin dominance with stablecoins, and Bitcoin dominance with stablecoins and Ethereum together. So you can see here very quickly, the Bitcoin dominance has been pretty flat between 40 and 41% since the 1st of September. Bitcoin and stablecoins are hovering near the top at 55%, where it kind of tops out in most cases. And when we look at Bitcoin, stablecoins, and Ethereum, it's a new high for the year as other L1s got smashed. So these three different categories nearly make up 3/4 of all the market cap of crypto right now today. Again, a lot of stuff is severely underwater. Solana, Near Protocol, many other names that got completely trounced over the last couple of weeks. So let's look at one name that isn't, and this is Litecoin. And I rarely talk about Litecoin, but this has emerged as one of the rare winners with the ongoing cryptocurrency market meltdown led by FTX collapse. Litecoin price outperformed Bitcoin, Ethereum, and it's a very old coin. It was born in 2011, and it rallied recently to nearly a 16+% gain month to month, and it's hit about 62.5, 62.75, shooting up now in this chart here to 69, and that is pretty stunning move. Now, the other thing is, when you look at the rivals like Bitcoin and Ethereum, they've both lost between 25 and 30% respectively in the same period, while Litecoin has gone up 16%. So woohoo to Litecoin, but Litecoin normally doesn't do very well during bull markets. So maybe this could be their time in the sun while everything else is falling apart. And sometimes certain assets go counter to others. Now, it's also punching above its 50-day moving average and 200-day moving average. 50-day is the green and the 200-day moving average is the red. And it hasn't spent any time above the 200-day moving average in the last year, except for briefly now this month. So Litecoin. Let's talk about the GBTC Bitcoin pair. Yesterday was a dark day for Grayscale Bitcoin Trust. I spent probably more time talking about GBTC over the last week to 10 days than I have in the previous year. But you can see here the pair. This is basically GBTC divided by Bitcoin price. And the pair dropped 20% in a day off the 50-day moving average. And this is what I always say. Sometimes things get so cheap, it's nearly worth the risk. And yesterday, again, was not the day to sell GBTC after a huge bounce today compared to Bitcoin. So people are rushing in. They're grabbing that massive discount, which hit nearly 45% yesterday, and saying this, enough is enough. Even if you do your EV models like I did over the weekend, it's worth maybe to some people to grab a little bit. Now let's jump a little bit forward. Speaking of grabbing some, Cathie bought some today as well. And it's from Bitcoin Magazine. ARK Invest is buying millions of Coinbase and GBTC shares per Bloomberg. She is a big Bitcoin bull, and this is the easiest way for her to on-ramp into Bitcoin and crypto. So she's grabbing these both up, which, again, love her or hate her, she has the courage to go in and buy this dip. And per a lot of the on-chain data, it's definitely a good time to buy. Now let's talk about Tesla. This is kind of a little bit Tesla good news, but there's some Tesla bad news coming too. The Tesla ASP, the average selling price is $52,000, and they have 67.4% of US EV market share through Q2 2022. And that is good, but the piece I want you to focus on is that selling price. 51,726. That's the highest we've seen in quite some time, which is stunning, and that will hopefully help margins for a very, very strong Q4. In addition, this is also, speaking of Cathie Woods, this is from ARK Invest, and they believe the important if here is if autonomous technology takes hold, as ARK inspect, then the EV, the electric vehicle S-curve adoption should feed an autonomous S-curve adoption cycle, turbocharging EV sales nearly eightfold over the next 5 years. That is an exponential rise, going from about 7.5 million cars in 2022 globally to 60 million in 2027. That is a big jump in 5 years. And in other words, barring any other infectious disease crisis, they believe, or supply chain bottlenecks, etc., or any other disaster, they believe 59 million, 60 million vehicle projection for 2027 would nearly triple the 20 million consensus forecast as shown below. Again, they believe this whole space is going to go exponential as we go forward. Let's look at stocks, because this is part of the good news, bad news. The stocks of the last 7 days, many of the big names have been holding up pretty flat. Microsoft, Apple, Google, flat over 7 days. Visa, etc. But some other big names have gotten completely hammered. You have Amazon down 6%, Nvidia down 6%, Tesla down 12%. I don't know what's with the sixes and multiples of sixes, but it seems to be quite common. Same thing with Intel and others. So it has been a strange market where some of the top growth companies in the world got smashed over the last 7 days, like Amazon, like Tesla, like Google, and I own those three. So, there are days when what you hold does really badly, but on average, over the time in the future, they'll do very well. I'm pretty convinced. So let's talk about some of the ugly news today. Switching from good directly to ugly, we go to the crypto market of the last 7 days. You can see here Bitcoin down 3%, hovering around $16,000. Ethereum down 9.41%. BNB 6%. Matic down 2%, although it's been bouncing around all over the place. Near Protocol and Solana down heavy. But the ones I want to train your eye on is there are some bright spots. We talked about Litecoin, dark green. Also ApeCoin and Monero also doing very, very well. So it's always interesting for me to see how money flows from what supposedly should be the strongest assets to what are sometimes the weak ones or meme coins during these weird market conditions. And that's the importance of pair trading. Let's talk about crypto asset flows. This one looks like it's a good crypto asset flow because, again, positive again, but there's a but. Asset flows can go into things that are not necessarily good. And in this case, a huge amount went into the short Bitcoin investment product. And that represented 75% of the total inflow. So everybody was rushing to hedge their Bitcoin positions. But probably sometimes when that happens, it's kind of too late. And that was a question we got a lot is, should we hedge, etc. Now, we look at this as well. The total assets under management for the short Bitcoin fund is also very, very high as we go forward. Now let's break this down into where the money actually flowed into different assets. Bitcoin did see inflows of about 14 million, but more than offset by the flows into the short Bitcoin fund of 18.4. So more people were shorting Bitcoin in these different funds than actually buying Bitcoin. And the AUM on short Bitcoin is now at 173 million. And it's kind of just off the high. Ethereum saw minor outflows as well of about $800,000, which is nothing. And the short ETH product also, I think, saw some inflows too. Now, the negative sentiment is also a result of renewed uncertainty over things like staking assets. People are worried, hacked FTX, etc. People worried about DeFi, and that has had a huge impact on names like Solana. Solana, you can see here, is down 3.3 million after being up year to date of 120 million. By far the best performer after Bitcoin and short Bitcoin. And of course, the multi-asset product as well. Also, outflows out of XRP, Binance, and Matic, totaling about $6 million too. So it's been a mixed week. Now, getting back to Tesla, we're going to talk about the Tesla drawdown. So here we can see Tesla is now down so far 59% over the last 382 days between the peak, November 4th, 2021, and today. And that is staggering. That was only surpassed once before. That was in right before C19 hit, when it fell 60%. But it only did that in 28 days. But a lot of things fell a huge amount. But remember, if you were a buyer of Tesla on the 15th, 16th, 17th, 18th of March 2020, you made a lot of money after the fact. And this is part of history. And sometimes when things go down so far, people get afraid and uncertain about the future. But again, it's always darkest before the dawn, but we've had a few dark dawns so far. So that is a little bit of information of drawdown history from Charlie Bolello. Now, related to that too is you can see here, since we're talking about drawdowns, this came from, I forget who it came from, but thank you to Sanjay for sending it to me. I forget the analyst's name that put this together on Twitter. Apologies for that. But anyway, they believe if we get the historical 84%, 83% pullback, 83, 84%, that'll take Bitcoin down to the $10,000 to $12,000 range sometime in December or to January of next year. So again, if history repeats, if the drawdowns are the same as before, we could go down there. I don't know if that's the case, but, we continue to be surprised in this market. So we should never say never again, as they say. Now, in addition, some macro stuff, trouble ahead. This is the United States information regarding personal savings in green versus credit card debt in red. Ladies and gentlemen, can you see a problem here on this chart? And that is, Americans are no longer saving any money and they're putting everything on the credit card. This move up is staggering and almost unprecedented at this level. And this is going to spell trouble, especially as interest rates are rising. People will be defaulting on the credit cards or missing payments, and their rates will go even higher, causing this whole, death spiral of debt. So be careful out there with your credit cards. Keep an eye on, make the minimum payment or try pay them off completely. But this is a serious warning sign as well. Now, switching gears, we've gone from the good to the ugly, and we're going to the bad, which is in the middle. So it's not too much bad news today. So first of all, there's a lot of rumors flying around Twitter that miners are unplugging, and that would not surprise me at all. This is from Trippin, funny name. But the question he had is, who has shut off their rigs? Last Bitcoin block found over 30 minutes ago. This is a 15 to 25% drop in Bitcoin hash rate across the network. Some large or several large miners just shut down. Now, this is completely understandable and completely logic. Many of you asked for me to do a mining update. I will do that tomorrow. But with this, we will track this very carefully. It's probably the case where miners, literally nobody can mine profitably with Bitcoin price around 16K unless they got state-of-the-art rigs and super cheap electricity. They are the only people that can make it. When you take into account real estate, personnel, etc., it is unprofitable. So many are running out of cash, and they probably said, okay, let's turn off these rigs and just move on. But when we look at the hash rate itself, it is not yet reflected. But this hash rate date is as of yesterday. Maybe the shutoff came last night, but we'll monitor this carefully and expect an update tomorrow on all of the miners and what we can assess from their financial condition. Now, this is another piece as well regarding housing dependence. This is how big the share of the economy housing makes up in all these countries. I always say the US makes up 20% of GDP, UK a little bit higher, Italy a little bit higher again, France, Germany. But Canada makes up a stunning 43% of GDP. The whole economy, very similar to Australia, is dependent on real estate. I think the Australian number is about 40% of GDP last time I looked. Now, the problem is anybody with a variable rate loan is going to be smashed. We also know that mortgage markets across Australia, Spain, United Kingdom, all have a greater share of new floating rate loans. And same with Canada, could be facing some of this too. And this is going to put extreme pressure on the housing market, which in turn will put extreme pressure on GDP growth rates because everything is tied into it. Housing market, construction, all the intermediaries that play in it, etc. Now, if we look at some US specific places, home prices in Boise, Idaho, Austin, Texas, saw a huge C19 boom. And now they're seeing a little bit of a reset as we go forward. But again, those with long-term fixed rates, we always urge people to get them. Lock them in, lock that rate in, especially when it's at historical lows, when you could get a 30-year fixed under 3% late last year in December, November 2021. Let's jump a little bit forward. Let's talk about QE, which is related to all this whole mess. And this looks at the QE Juggernaut and how even after the financial crisis of 2008, money printing has continued. And that's what we always say, as debt is far beyond 77% of debt to GDP as a ratio, central banks have enormous balance sheets and it will take years to whittle down or reduce. And in fact, in some cases, I don't even think it's possible. They'll try, but when a central bank stops buying bonds, as we saw in the UK, it can throw the markets into chaos. And now the QE has become the norm. The next time there is a recession or any type of adverse effect, expect more QE, which is money printing. And if that doesn't happen, it'll cause huge trouble in the debt market. We've seen the problem in the debt market today. Over the last couple of days, you see groups like DCG trying to raise money. Nobody's touching them. I covered bond debt rates yesterday as well for Coinbase and MicroStrategy. It's a shaky situation. And in final piece of news, I was throwing a piece of kind of an informational tidbit here. This is the world's biggest diasporas. This used to be an old term for when people migrated, but you can see the biggest contributor to Population living abroad is Guyana, then Bosnia and Herzegovina, Albania, Syria, Jamaica, Moldova, Armenia, UAE, El Salvador, Portugal, and number 28 is Ireland, and number 151 is the United States, with only 1% of Americans living abroad. So I thought that would be kind of interesting. So with that, everybody, happy Tuesday. I know the markets are looking a little bit better, a little bit more stable, but hang tough. Per the on-chain data we just showed, things don't look as bad as they may appear. So be careful out there, everybody. Big hugs. Thank you to the mods in the chat and everybody for being there. Bye.